Welcome, everybody, to the We Talk Money Show. You might be wondering why I am sitting in the host seat. Chris has been booted.
Hey, I've been demoted.
I am the host today, and the topic of today's show is going to be, is everything finally falling apart in the world and in the market?
These bears are taking control, man.
Yeah. So, there's a lot of places we can start, but I think where we need to start is probably the S&P 500 price action, because really that's dictating what's kind of going on right now and a lot of the sentiment that's out there. So I'm going to move over to just the S&P 500 chart here. And we do see that we have been in a pullback, in a correction, right? We are finally starting to approach this very important 4,200 resistance level that I've talked about ad nauseum. But let me see if I can, get a little line on that. Let me see, horizontal line. So here we go around this 4,200 zone. That's kind of like the big zone we've been watching, and price is getting there. So why is price getting there? Why are we selling off finally? Is it because everything is just finally happening that the bears have been predicting for all this time?
We are just trying to find, what the actual reality is in markets. Everyone has their viewpoint, but right now the bears are in control because there's a lot of negative stuff happening, particularly in financial markets. We've got yields ripping higher on the long end still, just incessantly every day. We've got crude ripping higher in the face of what looks like maybe a slightly weakening economy, but crude's like, we don't care, we're going higher. And on top of all that, you have an auto worker strike, you've got a potential government shutdown in the US, and it's just right now a flood of negative news.
So let's talk about yields real quick. I actually pulled up the yields here on CoiFin. We've got the 2-year, the 5-year, and the 10-year here, and yields have been ripping. And if you don't know, when yields rip higher, bonds are typically selling off. There's like an inverse relationship between yields and prices of bonds. So what's going on here, and how concerned should everybody be about yields ripping higher?
Yeah, I mean, it's a real concern, right? It raises the cost of borrowing for individuals, for corporations, for everybody, and not just the governments, because all of our loans and our credit is basically priced off these benchmark treasury yields. So when these treasury yields rise a lot, we're seeing real borrowing costs increases in things like the mortgage market. We've got, 8% plus 30-year mortgage rates. We've got corporate debt going higher in terms of interest costs, and you've got refinancing that needs to happen over the next few years with a lot of companies. So this is all actually real impact on the economy itself. And if you have this increase that we've seen happen too fast, then it's really going to cause consumers and businesses to pull back on spending, pull back on investment, and create that self-fulfilling cycle of a downward economy that the Fed kind of wants to happen. And, I've been on record saying over and over this year, I think the Fed has already made the mistake. I think they've already gone too far. I think they've gone too fast. Just as they said, inflation is transitory, we're not going to raise rates until the CPI hit 8% and slapped them in the face. We're now on the other side of this, and I think they're going to end up in another crisis, whether it comes from the banking system or an economy rolling over. But yeah, these yields are a real problem, and until they start to calm down, I think the market's going to have a tough time moving higher.
Let's just talk about mortgage rates. I mean, this is absolutely nuts. We talked about this, a couple months ago. I said, if we get into the 8 to 9% range, real estate is done. It's completely locked. There has been some movement. There have been some transactions, but I actually wrote about this in the Daily Doe, how really the only people that are buying houses right now are from new home builders that are doing interest rate buy downs. And I was talking to a buddy yesterday who works in the mortgage business, specifically with builders, and his companies have funded several $1 billion worth of real estate transactions over the past several years. So he knows what's happening. He's on the front lines. And I was like, what's happening? And he's like, yeah, the only way that people are able to get into these houses right now and afford the prices where they are is if someone like Lennar goes in and basically prepays a block of, say, $50 million, buys rates down. Maybe they cut a check for $2 or $3 million to buy the rates down from 8 to 5 or 4%, whatever they can get. They were recently advertising 3.99. So they've locked that in for a certain amount of buyers, but those buyers have to close within a certain period of time or those rate locks expire and they lose millions of dollars. So it's a really weird situation right now. And yeah, I mean, I was talking to my barber yesterday. He's like, dude, I would like at some point to be able to move into a bigger house, but him and his partner bought a house during COVID, right before prices went crazy. He locked in at like a 2.5 or 2.6% interest rate. And he was like, how do I move ever? Like, prices have doubled. Rates are through the roof. I'm not going to sell. And I think 99% of people are in that situation where if they do own a home, they're like, I can't go anywhere. And anybody that doesn't own a home, that wants to buy a home, how the hell are they going to get into a home? So until something major changes, until prices crash or rates come way down, I just don't see this market going anywhere.
Yeah, and we've seen existing home sales, the volumes of existing home sales already falling off a cliff over the past 6 months. It's really the new home sale side that's been holding up. And like you said, the home builders are buying down rates, but that is a de facto price cut. You know, when you're buying down rates, that's just capital that the home builder or the seller are putting in to basically reduce the overall cost of the mortgage for the buyer. And so that's basically a price cut.
It's a real cost. Yeah. And if you look at the ad that I clipped and put in the Daily Doe, it said 3.99% interest rate or 35 to 40,000 towards closing costs. So it's like, yeah, like you said, I mean, that is a real cost coming out of the builder's pockets. So prices, how far do they implode here? That's the big question.
Or, will they? That's the question. It's not how far will they implode? It's, are they going to come down?
Yeah.
Is it even possible with this market dynamic right now? And that's been my argument is I don't know if it's going to be that possible.
Yeah. Like what are the forces that are going to keep prices up?
Yeah. And if people aren't moving and the Fed keeps rates higher for longer, like they're saying they are going to, we're in a locked market. And like, I don't know if the supply is going to be able to get the prices down enough.
Yeah, and we've talked about in past episodes why prices haven't fallen further, and that is the supply demand scenario that we've seen where there's just not much supply of existing home sales being put onto the market. And so, maybe you start to see some incremental supply coming from, the Airbnb bust, as some people have called it. Maybe you've got some over-levered homeowners out there that are going to have to at some point relinquish the homes because they're upside down on payments. That could be potential supply coming there. You've got people that have to move for various reasons every year, so that's some supply that's going to hit. And price doesn't have to have a whole lot of volume to get pushed downward. We've talked about this before. There's not a one-to-one relationship between volumes and pricing. Yeah. If there's one transaction in the market, if that transaction happens at a lower price, that's going to set the incremental price. So,
yeah, the comps then have to go off of that kind of.
Yeah.
So basically, it seems like the stock market has just been fashionably late to the risk party. Like it seems like for a long time, the stock market has ignored a lot of these things, and it's just continued to chug along because honestly, a lot of the data was still okay. And I think even today, we got durable goods data that was okay, and that is a sign of, economic activity. So is the S&P 500 just kind of fashionably late to all the risks that were out there, or are things incrementally shifting in real time?
I think both. Yeah, I think the obviously the strength of the Mega 8 has held up a lot of the indices like the Nasdaq 100 and the S&P. If you look at like the equal weighted version of the S&P, it's doing much more poorly than the S&P 500 itself because the weighting of tech in the S&P 500 is 25%. So those big tech companies have been a big driver. But, I do think a lot of this just comes down to lagging effects. And that's my biggest concern and why I think the Fed's making a mistake. The Fed will come out and say that they understand that monetary policy has lagged effects, but no one's acting like that. Everybody, including all the macro watchers who are saying higher for longer, or the Fed needs to raise rates at the November meeting are just seeing inflation in real time, not coming down to the Fed's target and saying does the Fed need to go to 10%, 12%, 15%? I mean, like that's where I take that viewpoint. I'm like, think about what you're saying. If you're saying that the Fed needs to hike at every meeting until we're at 2% CPI, you're essentially saying that you're not going to believe in lagged effects at all. And that's where I think everyone's wrong. Like, we're at a precipice here where I think the economy is about to go into a spiral potentially. And if we get in fact, I think we should be cutting rates right now.
What does that mean when you say spiral? What does that look like for you?
Well, what happens obviously is that it's a self-perpetuating mechanism on the downside, and we've seen this time and time again in the economy. It's once you start to see a pullback of business investment, that leads to pullback in overall economic activity. You've got to slow down in hiring. You've got to slow down in spending. You've got all those things that essentially create a waterfall, and then you have the asset price effect as well if you've got markets declining. And so I think that's where we could see things move pretty quickly to the downside. However, you do have an offset here with, savers getting paid 5% plus interest rates, and that's helped. That's helped. One of the things that's helped keep things alive. But I just don't think people are giving enough weight to the lagged effects of monetary policy. I think we're just now starting to see it, and I think it's going to get worse. And I think the Fed is going to have egg on its face and is going to have to answer for a declining economy in 6 months or 12 months from now.
So that leads me to the big question on inflation, because I, pulled up the inflation here. This is obviously a concern. A lot of people are worried about it because it's ticked back up, right? Inflation has ticked back up, but you have argued previously that this is to be expected based on owner's equivalent rent and, just housing in general, how it's very lagged. And now we've got things like oil prices.
Yep.
And now we've got things like strikes that seem to be picking up more. And now we're hearing more and more, unions might be starting to strike. So I know we've talked about the wage spiral before, but at what point are you concerned about these strikes?
I mean, they're mildly concerning. I think, we've talked about also how unions are only about 9 or 10% of the overall economy. And not every union is striking, though I think most of them probably are seeing what's happening with the writer strike and the auto strike and saying, man, maybe we should get a piece of that.
Right.
But writer strike just got settled yesterday. They got a lot of their demands from what it looks like met. So I imagine the same thing will happen with the auto workers. The auto workers actually risk putting those automakers out of business with how ridiculous their demands are.
I've thought about that too.
And I mean, frankly, I think they're absurd. Like Elon Musk even pointed this out. He's like, the fast track to bankruptcy for Ford, GM, and Stellantis is giving these workers a 40% wage increase while reducing the work week to 32 hours. What are we, France? Like, what's happening here? Like, reducing our own competitiveness? Like, you're going to kill the golden goose if you're those auto workers. So I think, I am a little bit concerned about that, but I don't think ultimately that's going to become the problem. And if you put oil aside, I think we're in deflation everywhere else. I think, especially this time next year, I think we're going to be looking at, we're going to be talking about deflation again.
I agree with you on that point. I think the oil thing is definitely concerning, but we still have a lot to go before we get to the highs that we were at. Yeah. We're still kind of, at an okay price level. But if that continues to find strength, then that's when we might see that really trickle down.
Is oil really the only thing that's still inflationary?
There are other categories that, have seen, like smaller categories that are still seeing inflation, but that is, I think, one of the bigger drivers. Gasoline prices over the summer were one of the big components that got super hot in CPI. But, gasoline prices are actually down a little bit over the past few weeks, despite the rise in oil prices, which I think is interesting as crack spreads have pulled in. Look, I don't know what happens with oil, and oil is super important because it's an input commodity into so many other things. So if we go to $150 oil, I think we do have a problem. But it's sort of one of those mechanisms that is self-correcting, because if you do have oil prices rise to $140 a barrel, look what happened in 2007, 2008. It helped push the economy into recession. So to some degree, these things have that effect where they're going to be self-correcting, and we're going to be back in a recession and deflation before we know it if we continue to see these things that we're seeing currently in asset markets happen.
What does the data say recently about the consumer? Because in day-to-day life and anecdotally, we've all probably heard everybody's getting squeezed, and the wealth effect or the wealth divide has really just been magnified, right? The only people that have done well recently are people that have a lot of assets, right? This inflationary period has helped them, where if if you don't have free cash flow and you have debt and you're middle class, like those people are really getting screwed. So what does that look like most recently?
Have you seen that chart on the difference between the rise in costs for eating away from home versus in home? It's like widening.
Haven't seen the chart, but anecdotally, I have like my own, stuff I've experienced with that.
Yeah, people are starting to notice day to day. Like you go to Chipotle and you can't walk out without spending, $15-20 for one entree, right?
Yeah.
And this is true all over the place. And so I think it's interesting because this chart shows that food away from home, a lot of the restaurants took price up immediately when they saw commodity inflation last year. They took price up pretty dramatically. And that's why you've actually had pretty good results from a lot of like the consumer staples companies and the restaurant companies. And now you actually have some of those commodities pulling back, but they're not going to reduce prices. So you might actually see reduced prices in the grocery store. Your grocery bill might actually get a little bit better, but the restaurant costs are going to stay high. And so there's a big gap now widening between the costs of eating outside the home versus in home, which I think is pretty interesting.
I actually, 2 different times, I ended up getting dinner out for both of us, take home. And it cost me the same amount as it would cost me to get Blue Apron delivered and give me 3 days worth of meals for 2. So 6 meals total.
Yeah.
It cost me the same amount and that's Blue Apron delivery, which I'm still paying a premium for.
Yeah.
If I were to go to the grocery store, I probably would have been able to feed myself for the whole entire week for, if I really did it budget, consciously.
Yeah.
You can if you do it budget consciously. But I've noticed personally that eating out has become financially not really worth it compared to what I can get. Even with packaged foods.
Yeah.
How they do the Factor meals or Snap Kitchen. Even that costs me less and gets me way more for my money than one time going out to eat for 2 people. So that's what I've noticed on my end.
I haven't been to Taco Bell in like probably 20 years, but the other day I had a friend that was like, "Hey, take me to Taco Bell." I'm like, "Okay."
A friend.
Yeah. No, he was like, "Yeah, I just want to get some Taco Bell." I'm like, "All right, man, I haven't been there. Let's go take a look." In the drive-thru, I look at the menu and like my jaw dropped because the number one thing was like the crunchy gordita crunch or something.
Yeah, like a crunch wrap or something.
Yeah.
Some
Crunch
version
wrap
of that.
ice cream.
The last time I looked at a Taco Bell menu, I remember looking and seeing like 99 cents, $1.99. It was like the main things were like $8 and more.
Wow.
For like the meals or whatever. I was like, dude, that's crazy. How do college kids afford this?
That's wild.
I know we used to go and just get like bags full of junk and it would be like $10,
Oh, yeah. Man, yeah. $8 price points at Taco Bell.
Yeah.
That's crazy.
I do think it's going to shift back to eating in home becomes more, affordable and it's just easier and better.
Well, that's good.
Going out to eat has become quite crazy expensive.
Yeah.
Do you guys feel the same way? Or
I mean, what did we drop at the sushi place last night? Like $1,000? Like, yeah.
It was for a birthday, so that's a good cause.
True.
But I think people will still obviously do it, but it may be a little bit more of a special occasion vibe again. Like maybe we go back to, people tightening their belts again for the first time in a while. So yeah, I don't see how, if we stay on the current trajectory of what we're seeing in not only asset markets, but also what we're seeing with, the average everyday grocery bill, restaurant bill, I don't see how we don't have an economic pullback at some point. One thing that I think is confusing for a lot of people is, consumer spending. I think the Bank of America CEO even said at a conference this week, he said, we're still seeing card spending, but debit plus credit up about 4% this September versus last September. So they're still seeing overall increases in consumer spending, but how much of that is driven by price and how much of that is driven by volume? Mm-hmm. I've actually been reading a bunch of earnings reports lately that have shown that volumes are actually flat to down, but it's price that's driving the increase in consumer spending. And so it's not that consumers are necessarily feeling super positive and they're out there just gangbuster spending. It's that, it's inflation. Prices are up. And so on a nominal basis, spending is up. But I don't think people feel particularly good right now about the economic situation.
The confidence report came out, and I think that was down. Consumer confidence came out. I did want to pull this Daily Doe up that I wrote, Daily Doe newsletter. If you don't know, go to dailydoe.co. But I did point out some things, some data points to pay attention to over the next quarter. So in terms of the consumer, because that was your question on the consumer, and also mixing that with inflation and how we are going to, kind of predict what's going to happen there. But I wanted to note checkable deposits. I mentioned that in relation to student loan payments having to be repaid. And we need to kind of follow that data to see if checkable deposits decline as student loan payments start to have to be
Maybe
paid.
explain what checkable deposits means.
Basically, these are high-yield savings accounts that are accessible without any limitations, and these are checking accounts. So, like, think of your checking account at your bank and your high-yield savings account that pays you interest. It's still considered to be accessible right away. So money that you can get it.
It's liquid. You don't have to sell an asset.
So I'm kind of watching this number. I'm also watching oil prices, obviously. We want to kind of see what happens there in terms of how that moves into inflation. I'm also watching new home sales because my theory is housing is the economy, right? And so the only way we can really gauge housing demand right now is by new home sales.
Yeah.
We definitely can't gauge it with existing because it's gone down to a hole. So I'm watching new home sales to see if demand is going to continue, because if demand falls here, then we may be in some trouble, right?
Yeah.
That's where things are really going to start to break. And then also watching money market mutual fund assets. So right now, a lot of people have a lot of cash piled into money market mutual funds. And I'm kind of wanting to gauge, how does that relate to the stock market sell-off? Is the money on the sidelines, aka this money that's risk-free, getting risk-free interest right now, are people going to have the desire to move that risk-free money into stocks as stocks sell off more? So that's kind of what I'm watching there to see if we're going to see a pullback in money market funds. Because if we do, then that could be signaling people are moving money either out to pay for debts or moving money out to pay for or to buy risk assets.
Yeah, I guess that's the bull case, right? Is there's cash and people could buy stocks with it, but if rates stay high, is your average person going to T-bill and chill? Right? Are they going to just collect the 5% plus risk-free, quote unquote? What do you think, Trav? Do you have a thesis for that?
That's tough. I would guess on the whole, it will be a lagging indicator because, if we look at what people have done historically, they'll be most bearish at the bottom. So they won't be ready to allocate to stocks necessarily until, we're already past the bottom.
Yeah.
So that would be my guess. But it would be interesting. It is possible that, like you said, some of the money market funds could start getting moved out just because of people having to pay expenses and having to pay bills during a harder time frame. Mm-hmm. So that could be part of that. But yeah, my guess would be a lot of that money market fund capital will wait for the Fed to cut rates before it moves back into the market. So my guess is on average, it'll be a lagging indicator, but I don't know. I actually don't fully know.
I actually know people right now that are arbitraging. They are doing 0% credit cards, balance transfers for 12 to 18 months and letting their money sit in a high yield savings or a money market mutual fund to earn interest.
Smart.
And they're just
free money,
pulling the interest, and then they're going to eventually take all that money and then pay off their debts, their credit card debts with it.
It's not a bad play as long as they don't.
It's kind of not a bad play. I mean,
yeah, as long as they can meet their monthly payments and they don't trigger something that causes them to have
yeah, how does that go wrong?
You don't have discipline and don't pay it off when you're supposed to pay it off.
Then you end up in debt.
Then you end up with a boatload of interest.
Oh my God. Yeah, if you don't pay it on time, all that interest accrues, doesn't it? So it's it's not just 10% or 20%
you gotta pay
for the
it
month.
off.
It's yeah.
When the 12 to 18 months is up. But people are doing that. And that's why I think this is such a weird environment that's going to be very hard to gauge how, are people doing that with student loan debts right now? Maybe they have the cash, it's in the checkable deposits or in a money market mutual fund and they have it. They're just hanging on to it because they're earning so much interest on it. I don't know. There's some weird dynamics.
Someone did circulate something on Twitter recently that there were some student loan balances being repaid here at the onset of the repayment window. And so that does suggest that at least some portion of those student loan borrowers were super savvy. They were saving money or whatever they were doing, not paying their loans when they didn't have to. And then now they've got capital and they just pay off the loans now that the interest rates and the payments have restarted.
Exactly. That's it. I saw the same exact tweet and chart, and I was trying to find it, and I couldn't find it.
I know. Yeah. Right.
But yeah, so those are just some things that I'm thinking about, and some data points that I'll be keeping an eye on. But let's move to Bitcoin. What the hell's going on with Bitcoin? I feel like I have the Bitcoin chart up here. We've been what is that doom? What's the trend line of doom for you here? I call it
the line of hope. The
doom.
line of hope.
Oh, line of hope.
Because when a line of hope breaks, you get a big washout. So like back in 2018, if you go back to 2018, 6,000 was the line of hope. And then when that broke, it washed out and went from 6K down into the 3K range. Yeah, keep going. It's way back there. Yeah. So from 2018 down there, we were bouncing around 6K for like almost a year, and then it snapped, and that's what caused like the despair.
There it is. That line of hope.
Yes.
Right?
Exactly. Yeah. When that broke, we went from 6K to 3K. That was a great buying opportunity. So yeah, right now we've got 25K as a line of hope. And if that snaps, I think we're going to be back at 20 very quickly. But I'm not trying to guess. I'm not trying to predict. I'm just prepared for either a 25K snap, which could be a good short opportunity to the next support zone, or a dip buy if we get a big enough and fast enough washout to or below 20K. Or if price holds up and we break out above 32K, I'd entertain a breakout there. But right now, this is just what I call a 50-50 zone, bouncing in between support and resistance.
Can we point out the relative strength that Bitcoin has right now against the indices? Kind of? I mean,
yeah, it's been holding
a little
up
bit
this week. Yeah. I think it's too soon to really make a call that there's sustained relative strength. But yeah, if you look at, a NASDAQ priced compared to Bitcoin, they've been in tandem, and then there's periods of strength and periods of weakness. Right now, with stocks selling off, Bitcoin's been flat and it's still above support. So yeah, buyers are definitely trying to hold this.
Yeah, I would say that I'm surprised by the ability for Bitcoin to hold up here in the madness as everything's unraveling in our world.
Yeah. People have been looking at Bitcoin as an asset to fly to for safety this year. It's still up. What is it up year to date? Like 60% or something. It's performed well. And I think the odds are, if I'm thinking longer term, I think the highest probability is for Q4 for Bitcoin to stay below 32K and then have a big Q1 of next year prior to the halving. That's what I think is the most likely situation. But again, there's like 3 or 4 paths that we can map out here and different ways to play it.
Okay. So is there any crypto news we need to be aware of, or are we just kind of sitting and waiting for this Bitcoin chart to give us something?
Well, what is today? Wednesday. Yeah, today, in today's Daily Dough, I just wrote up a little brief about how there's bipartisan support now for the SEC to get its head out of its ass and to approve. I think it's the top one.
Is it? Okay, there it is.
Yeah.
Right.
U.S. lawmakers push SEC to greenlight spot Bitcoin ETF.
Okay.
It's getting harder and harder for old Gary G to justify not having a spot Bitcoin ETF. The pressure's building, and I love to see it.
He's getting ganged up on.
Yeah, we'll see if it actually happens this year. I think, again, probably the most likely situation is next year, but the pressure cooker is building.
Yeah.
Speaking of pressure cooker, I want to talk about falling knives right now. I want to talk about the what I am deeming the new stock pickers market. We are, I believe that we are entering or have entered into probably an ultimate stock pickers market. There have been stocks that have been completely hated Trav, you shared the falling knife tracker in the community with everybody, and there were tons of names from that, but I just wanted to pull like a few out. So like I was looking at Chewy.
Wait, but real quick, can we define what that means for anybody that doesn't know? What is a falling knife and why is it a stock picker's market? And what does that even mean?
Okay. Well, Trav, why don't you take what's a falling knife?
It's funny. I don't even think I have a precise definition of falling knife. It's kind of like you know it when you see it.
Yeah.
But I mean, generally, it's a chart that's been straight down for a consecutive number of weeks or months. And, it's a chart that's basically just been more or less straight down for a significant period of time. And, in the case of a few of these, like, the one you've got up here, Chewy, it's been down for 11 weeks straight.
I mean, wow.
That's pretty awful price action. Falling knives, we also often talk about how, you don't want to necessarily catch a falling knife. Mm-hmm. Obviously, if you were to catch a falling knife in your kitchen, you could, sever your hand. And the same is often true in stocks or other financial assets. It's like if you buy a falling knife too early, you can really get hurt. Like a stock could be down 80%. It could still go down another 50. It could still go down 100% theoretically if it's a bankruptcy. So those are often rules that traders set for themselves where they say don't catch a falling knife. You oftentimes, if you're on a shorter term time frame, you may want to actually wait for it to stabilize, base, break above a moving average before you buy it. In my case, if I feel fundamentally comfortable with a stock and I actually think the price is giving me amazing risk reward, sometimes I'll buy a falling knife.
So
Nice.
I personally think that we are entering a stock picker's market.
Mm-hmm.
And the reason that I feel that way is because when you look at the indices are kind of, I wouldn't call them cheap. I wouldn't call them expensive. They've just kind of been in purgatory in terms of valuation, right? Like I'm not excited to buy the S&P at 18, 19 times earnings.
Yeah.
I would be excited to buy the S&P at 12 to 16 times earnings, but we're not there yet, right?
Yeah.
And so I guess when I see charts like I have pulled up here, I pulled up Chewy because Chewy's just been, I mean, this was a pandemic darling. It's still, I don't think, cheap, and it has its issues, but the largest pet probably online retailer out there, it's the Amazon of pets.
Is that the pets.com of the tech bubble of 2000?
I don't know. I don't know. But when you see stuff like this, that's when I get excited. And I'm seeing a lot of charts like this, like high quality names, Etsy's one, Chewy, Square has been
demolished.
Yeah.
Demolished.
A lot of fintechs. PayPal's trading at 12 times this year's earnings and growing earnings.
Yes, that's another one.
I think you make a good point. What I've noticed, I've been doing a lot of work in the past 2 weeks and will continue to do work as this correction potentially deepens on individual stocks. What I've seen, consumer discretionary stocks in particular have been absolutely hammered. It's like the stock market is looking forward and saying, you know what, we actually are looking at pricing in a higher probability of recession, because when you look at the stocks that have sold off most in the last couple of weeks, it's been consumer discretionary. You also look at sectors like retail, restaurants, those have been hit really hard. Small caps hit really hard. So even though, the S&P may only be off 8 or 9% so far from its highs, there are stocks that are easily off 30 to 50% already. New lows in things like, even things like Target, Dollar General, a lot of those fintech stocks we mentioned. So there's a lot of carnage already out there. And if we get this correction deepening, then some of those stocks are going to get super, super cheap potentially. So yeah, I think we're already doing the work, and I think we're already starting to see bargains that have emerged. So while the indices look like they're maybe not super cheap yet, there's stocks that are already looking optically cheap.
Love it.
That's the
great.
key, right? It's digging into it. It's not all just about the S&P 500. If you know where to look, and I heard this today on Bloomberg, and I completely agreed with what this person said. They said this is a great market for skilled stock pickers, and he was very clear, because in a market like this, you have to be skilled at stock picking, which Trav, you teach people how to be skilled at stock picking. He's taught me how to be skilled at it. And so it's like, unless you can't just go, you can get yourself into big trouble right now if you're not careful. on the stock pick side.
Yeah.
So
this is where fortunes are made or lost, right? We see this in crypto too, where there's an extended bear market and then everybody's rushing for the exit. It's like, okay, which ones are going to survive? And out of those, which ones have, I just did an interview with my buddy Billy talking about asymmetric bets, right? It's like, which ones are just beat to death that have massive upside and a higher probability of surviving. But the downside risk here, right, is like with reflexive, like just death spirals where, it looks cheap, but it's like a value trap and ultimately the business is going to fail because it's over leveraged or whatever. So like, is there anything that you guys are looking at to decipher between these things look cheap, but they're actually garbage versus these things are cheap and they have a higher probability of bouncing and have really good asymmetric reward to risk?
Yeah, I'll give you a great example. So we were just looking at Chewy. They're the largest North American online pet retailer. Pretty clean balance sheet, no financial debt to speak of. But a lot of their peers are also down significantly. And one of their big peers is Petco, ticker symbol WOOF, Wolf. And that thing is a massive falling knife. But they are super, super levered. Wow. Ton of debt on the balance sheet. And that debt has been getting costlier and costlier by the month as rates have risen because they have floating rate debt. So they are in potential trouble if we stay in this environment with the consumer weakening and interest rates being high and going higher. Wow. So this is one where if I had to choose between a Chewy and a Petco, which are both down a ton, I'm probably going Chewy over a Petco.
Because of the debt load.
Because of the debt load. And Chewy's also got some other interesting aspects. I mean, they're still growing sales at double-digit rates as of last quarter. Like 75 to 80% of their revenues are subscription, basically on the auto order for things like pet food and toys.
Do they have physical stores or is it all online?
No, it's pretty much all online. And they're going to take a hit in the near term as the consumer weakens. Like that's I think the big concern right now is that, consumer spending in the pet category particularly looks a little bit weak. They could actually see revenues decline a little bit over the next year. But, I think if you're a longer term investor looking at this, you haven't ever had a better valuation on Chewy since it's been public as a company. So yeah, I think when I look at those two situations, looking at two stocks that are both falling knives, it looks like one is probably a safer bet than the other, while still retaining some potential upside. So yeah, those are the kinds of situations we look at. And, I've sounded like a bear today on the overall economy. I'm kind of pissed off at the Fed, but I do think if I'm putting probabilities on scenarios, I think, we're more likely to have maybe a 15-20% correction in the market. Maybe have a mild recession, but there's still a lot of opportunity for, the Fed to fix the problem quickly, for liquidity to come back off the sidelines from money markets to sort of stabilize the situation. So I think we could be in like a 2018 situation where the market sells off 20% super fast. There's a lot of good buying opportunities. We'll take some of those and then hopefully we get, quick recovery.
I kind of got excited today thinking about this because it's funny, the doomier and gloomier it gets and the more prices sell off and go into the trash can, the more I perk up.
Yep.
It reminds, like, we've gone through this. We've been through this so many times now.
Oh, yeah.
And that feeling we got in 2020 when everything was selling off and it just felt dire and people hated everything.
Yeah.
I'm starting to get that feeling with certain charts that I'm looking at and that excites me.
Yeah.
It's like, now's the time, people.
How does that feel to you, Chris? Like when you were in the depths of the bear market in 2020 and Bitcoin was selling off hard, what was that feeling for you like?
I was crying a lot. No, it was great. I mean, it was juicy, right? We were trying to figure out where the bottom was, and we were quote unquote blessed with the COVID panic where price in Bitcoin went from 8K down into the 4K range. We were in Discord, with everybody like hammering the bid. And it's just about pre-planning what you're interested in, like you guys have been doing the work on, and waiting for the right situation to present itself. And typically when everybody's freaking out and rushing for the exit, step in as the buyer of last resort and make life-changing gains, right?
Was there any nervousness, that buyer of last resort strategy that you've actually articulated in the community? We've got some parameters around it. Was there any nervousness though that this still feels like dangerous?
There's always the possibility that Bitcoin breaks and goes down and never recovers, right? And that's always in my mind that could happen. And I have to accept that as risk. But as long as the thesis is intact and I think Bitcoin is going to survive long term, I'll stick with it. Fortunately, a lot of people get dissuaded into believing the narrative in other shit coins, and they do lose everything. Happens every market cycle. And Bitcoin just continues to show that it's the Mac Daddy, and people overthink it and try to find the next, big thing and put all their eggs in that basket, where DCAing or taking very tactical trading opportunities is actually the most profitable thing you can do.
Yeah,
So.
I think it's supposed to feel a little uncomfortable.
If it doesn't feel uncomfortable, you probably don't have enough skin in the game, or you're buying when things are still euphoric, right? If it doesn't feel like a knife is getting twisted in your gut, are you really even trying?
Yeah.
Okay, that leads me to, what are we thinking about this government shutdown situation? Are we worried?
Let them shut down. Go home. Replace them all.
I think it'll be a nothing burger in the end. I think people are going to panic for a few days, but ultimately I think this thing gets resolved within 2 weeks. Like, they're not going to stop paying the military. When those paychecks come due middle of October, are they really going to just stay shut and not pay members of the military?
Well, they back pay.
No, I mean, yeah.
They've done the whole furlough thing before. It's a big fraud.
Yeah.
It's a big game. It's just like the debt ceiling, whole argument. Those two obviously go hand in hand, but it's like, what a joke. What an embarrassment.
Yeah.
Didn't we just get through this with the debt ceiling?
Yeah.
And now here we are again.
I don't know if it's just getting older, if it's always been like this. It feels like recent years it's gotten just even more and more incompetent at the federal government level.
Yeah. Well, you've got people that are so old, they literally have handlers with them.
Yeah.
These are the people running the government. Are you fucking kidding me?
That's scary.
Yeah, it's ridiculous. I try not to get too pessimistic about it, but it's hard to be optimistic. I guess when I look at guys like Vivek, who's our age, trying to get into politics, whether you agree with his political beliefs or not, it's good to see a millennial getting involved, because who else wants to be in politics? I don't know anybody sane that's like, yeah, I want to be a politician. Every smart person I know is like, I would never do that. That's terrible.
Yeah.
Why would I want that much hate and division? And
Yeah, you're exactly right. We need that energy, that intelligence back in at the federal level in politics. I don't know why we don't have more of it, because it seems like these people are getting pretty rich while they're there. So I don't know. It seems like it would make
pretty lucrative.
Yeah.
I'm like, I forget where I heard this, but I'm like, can we get somebody who's smart, moral, and capable?
Yeah.
Those three criteria, and I look at both sides of the aisle. I'm like, I don't see anybody who's got those characteristics.
We need like 50 of them. We need like 100 of them, right?
Yeah.
Like we need them. We need enough of them to like tip the scale on issues and just like common sense, basic things.
Those people exist. They're just not in politics.
Yeah.
Because they're smart.
Yeah, exactly.
Yeah.
Oh man. Hey, I saw the other day, we were looking at Airbnbs, and I was like getting frustrated because the costs were so high. I found somebody that rents a tent, not a yurt, not a fancy glamping thing, a literal tent for over $100 a night.
Wow. Is it like in their backyard or something?
It's somewhere like in Arizona. It's probably got a nice view or whatever, but a tent.
Like, do they even own the land? This is hilarious.
Great question.
I don't know.
I don't know.
know.
But it's pretty wild. I think we actually do need like an Airbnb bear market because like the prices they're charging for some of this stuff, I remember literally 10 years ago, we did a trip around the world, and the value you could get on Airbnb was incredible. One place sticks out. We were in Edinburgh. We had this one condo that had a view of the castle. It was a modest condo, wasn't huge, but it was nice and comfortable. It was like $50 or $60 a night. And like something equivalent to that now is probably 10 times the price.
Yeah. Oh yeah. 300 minimum a night. Yeah.
Yeah. And it's just wild to me that, things have changed so much where now, after all the bullshit fees on Airbnb, it's like, it just makes sense to go to a hotel now. It's kind of sad. So I don't know. I don't know what my point is in bringing that up, is like, we either need more supply or we need some kind of recession to bring those prices down.
We just wanted to vent
Yeah.
about Airbnb
Just want
prices.
to vent. I'm like, Really? $100 for a tent? Okay, that's where we are. Yeah, we
can
need
confirm.
a recession. I keep jacking those rates up, man.
I did see the listing and it was
That's
a tent.
fair.
So
And people were paying it. It had several reviews.
the view must be incredible.
Better be.
Man. Well,
Immaculate view, I'm sure.
Yeah.
Anywho, all right. Well, what are you looking forward to over the next few weeks?
Well, we're traveling a little bit, so hence the Airbnb searches. Going to ride my motorcycle through the desert a little bit, waiting for Bitcoin to move.
Yeah, at least it's holding up. You got that going for you.
So far, yeah, we'll see. I'm just sitting on my hands, waiting for a big play.
Anything on your end, Trav?
falling knives.
Falling knives.
Yeah, I'm just out here trying to figure out which ones I want to try to catch.
That's where we're at. Yeah, I've been gonna be putting a lot of time into the markets over the next few weeks and listening to a lot of earnings calls.
We do have earnings in about a month or so. Well, no, less than a month. I guess we'll start to see the banks report earnings in about 2 weeks. So we will start to get some interesting. I'm going to be actually quite interested to see what happens when the banks and the regional banks report to see obvious things like credit metrics and how the consumer is doing, but also what does the price action look like in regional banks? Are we going to get another regional bank crisis? I don't know. I'm not saying we will, but that's what I'm going to be looking for there.
Yeah, we're still waiting on the commercial real estate collapse, right?
Yep.
Still waiting on that.
And those bond portfolios are not feeling good with rates up, bonds down. So,
Trav, I have a question for you.
yeah.
How often do you think of the Roman Empire? Have you seen these videos going around?
Oh, yeah.
Do you guys really think of the Roman Empire that much? Honestly?
I thought I was kind of a weirdo with that kind of stuff, though. But I think about like the history of money, and not just the Roman Empire, but that is a theme that comes up a lot. But it was funny, like seeing all the women taking the videos of their husbands, like, honey, how often do you think of it? It's pretty frequently. And I guess women didn't know
Do
that.
you think about the Roman Empire?
Probably once a year. Yeah.
Once
And
a year.
in the context of like the comparisons that get made, the fall of the US, versus like the fall of the Roman Empire, like I think there are definitely some similarities there as to the age of decline of our civilization. I tend to be a little bit more of an optimist though.
Yep.
I don't quite subscribe to the theory that the US is just like the Roman Empire, but yeah, I think we have to definitely think about history a lot in financial markets and try to take away lessons from that, because there are certain things in human behavior that just never change.
So I agree with you. I prefer to be an optimist because why not? Like if things work out and they go well, we make money. If they don't, it doesn't matter anyway. So you might as well be an optimist, right? But, I tweeted this and I wanted to ask you guys about this just to see if you agree or if there's some blind spots I have here. I said people are connecting the dots between what happened to the Roman Empire and what's going on in the US today. And here's like a few things that caused the fall of the Roman Empire. It was economic strain, so devaluation of currency, high taxation, overstretched economy, political corruption, weak leadership, internal strife, right? Military decline, overextension of borders, reliance on mercenaries, aka contractors, societal decay, decline in civic duty, a sense of responsibility to your fellow man, right? Increased inequality, right? External factors like they had like barbarian invasions and plagues and stuff. Well, I guess we had, like a pandemic, which was kind of a big event.
Yeah.
Things that are happening in the U.S. today: economic strain, rising debt, inequality or pressing issues, political corruption and divisive politics, high military costs, bases all over the U.S. or all over the world, excuse me. Societal issues like inequality, racial tension, polarization. And then global competition, with the quote unquote rise of China, which I know is, they're not exactly doing peachy, but yeah, what do you guys think of that? Are we about to fall like the Roman Empire, or are things different today that are going to prevent that kind of collapse?
We are checking a lot of those boxes.
I know. It's like when you put it like that.
Even Elon tweeted a photo of the book series with the fall of the Roman Empire. So a lot of people are thinking about it.
I think awareness is the first step, right? And there's
Yes.
a lot of smart people that are aware of this problem. We do have, the ability for information to travel much faster, for people to be smarter, for, us to adapt more quickly, I think is one benefit. Again, I tend to be an optimist because of things like that. Maybe even things like AI, right? Becoming smarter through humans melding with machines in a certain way. But yeah, I mean, there's a lot to be concerned about for sure.
Let me give you an example of something tangible that to me is like kind of a bellwether for more problems to come. I hope I'm wrong.
I thought you were an optimist.
I am. I want to be an optimist, but I'm also a realist, and I want to look at the data and like say like what's happening, what's getting better, what's getting worse, right? So one thing that's getting worse is the fact that stores are shutting their doors in complete geographic areas.
Oh, you mean like Target?
Boom. Target closing 9 stores because of theft.
Yeah.
And we've all seen the videos on Twitter and stuff that's going around of people just blatantly. There was a Apple store that just got overtaken by a whole bunch of people just stealing crap.
Yep.
They don't realize those devices are actually worthless because they can lock them,
Yeah.
But stuff like that, right? Theft is getting so bad. And like people on the left want to look at that and say, oh, it's because people on the right stopped buying from Target because of the political thing. No, it's
That's
because of
not it.
theft, right? So I don't know. It's just like this is an example of how divisive the world is becoming and how moral decay is actually eating away at real businesses and affecting stocks, right? Affecting what we do day to day.
Yeah.
So I'm looking for reasons to be an optimist, but every day I'm like, man, there's just more and more evidence for things decaying.
Yes, but as a counterpoint, I will say, like, as far as adaptation is concerned, we're already seeing a little bit of a pushback now in areas like San Francisco, where you're finally getting the counter reaction to what's been basically the status quo there for the last 5 or 10 years. You're starting to see demands for change. You're starting to see the political winds change a little bit, and I think that's probably good and necessary. And I hope it goes further. But we are finally starting to see that, like even the mayor is starting to implement more cleanups, and they've got a long way to go. There's deep rot in certain areas that I think have to get addressed. But I think you will see that push and pull. Like if you go too far in one direction in America, I think there tends to be a counter reaction.
Yeah, I would love to see a capitulation on the West Coast and see more, hey, let's enforce the rule of law.
Yeah.
What about that for a start?
That
Now,
was
there-
going to be my answer.
There are some examples where maybe there was a long-term decay, like Detroit. Detroit is, it has come back, especially in certain areas. But there are cities that have basically been hollowed out by, the deindustrialization of the U.S. over 50-year time frame, and the great cities that were once large population centers that were growing that have become cities that don't grow. Or
Yeah, does
shrink.
that become San Francisco?
Yeah, and that's a question. But San Francisco has some things going for it geographically, maybe that other cities don't. But yeah, I don't know that there's a clear answer yet. But I'm optimistic in the sense that people in the United States and other places will adapt and start to see the errors of the existing policies and start to shift. We're relatively, from a left-right perspective in the US are relatively, 50-50 almost. So it's interesting in that aspect too, that, if you go too far left or too far right, there tends to be a movement back towards that middle at a certain point.
Yeah. And to me, I mean, this is more than just left and right. Like it's looking at things like, debt and like moral decay, meaning like people just don't care about each other anymore. Like at one point there was going to be another statue on the West Coast called the Statue of like Responsibility, I think it was, because Americans are really big on liberty and freedom and self-preservation, right? Which I fully believe in, and I think that's really important. But along the way, it's almost like we kind of forgot that we have a responsibility to our fellow man, and like you just don't know your neighbors like you used to, and like all this stuff, right? I just think about things like that as well that aren't exactly a left or a right issue. It's just like a societal issue at large. And so when you look at what the government's doing and the debt loads and all this stuff combined with that, I'm like, are these trends reversible? I don't know.
The individualism
Yeah.
that we have.
So there's an example of, I just saw this on Reddit the other day. There was a baseball game, and this girl caught a home run ball or a foul ball, and it was like a big deal. Whoever hit the ball was like a star or something. And she was like, oh, cool. And like her friend was like, oh, can I see it? And then that friend was like, oh, can I see the ball? The ball made it around the entire stadium and came back to her.
Oh, wow.
Oh.
That's cool.
What are the odds that happens in the U.S.?
Oh, this wasn't in the U.S.
Oh.
No, this was in Japan.
I thought this was in the U.S.
No,
Okay.
this was in Japan.
Oh.
That's
Yeah.
Japanese culture.
Yeah.
They have a very, their society is very much about the aggregate as a whole, right?
That's why we
Where in
all
the
wanna
US,
live.
somebody would have been like, whoop, thank you, you know?
Mm.
Well, I would hope not. I would like to think not, but you're probably right.
Mhm.
And that's what stinks.
Yeah.
So
I didn't mean to take this in
Yeah.
a depressive direction, but I've been thinking a lot about it because that affects the future of markets, right? Is if you have societal decay.
well,
that
it's
affects-
already. I mean, look
Yeah.
what's happening with Target. Target is shutting down stores because it's going to be better for their profitability to shut these stores down. They keep getting stolen from, and then to keep them
Their stock's at a multi-year low, and I think a 10 or 20-year low in terms of valuation multiple.
pummeled.
Yep.
Pummeled.
So I think there's a trend that I see that I don't necessarily like, but I get it. It's, people using geo arbitrage, not just, geo arbitrage is basically earning dollars and living somewhere cheaper, right? And the main motivation for that was like digital nomads going overseas, living somewhere cheaper, being able to save money, right? So with inflation and the cost rising in the US, the financial pressures have gone up, but also societal pressures. And I've been seeing videos of people that are just showing why they're going overseas for different reasons. And I just hope that trend doesn't accelerate because that's going to be a brain drain on the economy. So
Yeah.
we'll see.
Well,
Anyway.
on
On that note.
that note, we're going to say that we have hope for the future here. And I realized that I was looking at the wrong camera when I started this podcast. So
All good.
apologize for that.
Yeah.
All right. Well, I guess that'll wrap it up, right?
Yeah.
Okay.
Take us home.
I'll take you home. Want to say, go to dailydough.co if you're not subscribed to our newsletter. We all write for the newsletter, and it'll keep you informed, and it'll keep all the noise away from your brain that's out there. Also, go to wetalkmoney.com/community to join our wealth building community if you want to build more wealth. That's what we do. And we love teaching you guys how to do it better. So do that, and be sure to like and subscribe. If you wouldn't mind writing us a podcast review wherever you get your podcasts, we would greatly appreciate that as well. We're trying to grow, get out to more people. And with that said, we'll see you next time.
See you guys.
Cheers.
Thanks.